Hey everyone, welcome to Digital Wealth Insider. Today we've got Dan Roberts on the show. Dan, how are you doing?
Pretty great. Thanks for having me on, Mike.
Yeah, thanks for being on. I was super fascinated to hear your story as a journalist and somebody that transitioned into venture capital and all the things that you see in the crypto space. Why don't you give us a brief overview of your background and history?
Sure. Let's see. As it relates to crypto, because I think that's our focus today, right? Actually, first wrote about Bitcoin back in 2011 for fortune.com. I think it was the first time any Fortune story mentioned Bitcoin. So early days. Practically day one. And the news peg at that time was that, if you remember, and this brings us back to the days when Gawker was still a going concern, but that website ran a big feature about Silk Road. And I actually think that was kind of a moment, a milestone for a lot of people. First time they ever heard about Bitcoin. And actually, what had happened, the immediate result of that was that Chuck Schumer, among other politicians, sent some kind of letter saying, "I want this Bitcoin thing looked into. I don't like this," which makes perfect sense. In some ways, that story kind of sounded the alarm. So long story short, just kind of wrote an explainer on what this Bitcoin thing is and why politicians are up in arms about it. And my fascination grew from there. Kept covering crypto, among other things, at Fortune. I spent almost 6 years at Fortune. Then went to Yahoo Finance, same amount of time, about 5.5 years, writing stories, covering news, a lot more on-camera stuff and interviews. And I think during that time, kind of even more so, became the crypto guy. The timing was good. 2017, we saw that big explosion in price, and that was sort of the Thanksgiving table moment, if you remember that cycle. For people who've been covering crypto for a while, like this stuff always goes in like 2.5 year cycles, right? So there's boom and bust, and interest comes with that, and then mainstream interest falls, and everyone says, "Oh, it's dead." It's never dead. So covered crypto very heavily during my time at Yahoo, and then in 2021 went over to run Decrypt, one of the crypto news sites. For my money, one of the best, three or four. I was editor in chief there for about 2.5 years. So I guess in a way went all in on covering crypto. Great time to be doing it at that time. It was the retail investor revolution and the Robinhood stuff and the GameStop, GameStonk and the memes, and all of that was very tied up in that crypto run up, I think. And finally, that brings us to, I just spent a year on the other side of the curtain, so to speak, inside a Web3 VC fund, Variant. So interesting, educational, and man, what a time right now as we record this. We got Bitcoin like close to all-time highs.
Yeah, interesting. And we talk a lot about contrarianism here on the podcast. That's really our theme, right? What it means to be a contrarian. And of course, I think the hardest part of it is you're doing something that the crowd isn't. And so the crowd generally doesn't understand. And they often ridicule you or ask, why are you focusing on this? So I've got to ask you, like, why focus on crypto, especially in the early days,
Yeah.
but why focus on crypto at all?
Yeah, well, you're 100% right that not only is it something that I think is opaque to a lot of people, but also that because they don't understand it, they dismiss it out of hand. Many people in my life, family members, they just say, "But isn't it just kind of fake? Like someone just made it up. So why should it be worth anything?" Which I understand that feeling. I'm not one of these people who, point and laugh or say NGMI not going to make it or they don't get it. I don't blame people who, even after all this time, just kind of can't get there. They can't wrap their heads around why something that didn't exist before 2009 should be worth, $72,000 or whatever it is. Now, of course, there's always the Buffett, Ben Graham answer of Mr. Market, and something is worth whatever someone else is willing to pay you for it. Or sometimes I like to answer that by talking about, that value has gone digital. But regardless of whatever explanation you want to give, I think you're exactly right that a lot of people, they just kind of don't want to hear it. How many people out there in traditional, cautious investor types, many of them very famous people, they say it's a fraud and a scam or it's a Ponzi, and they cling to that even when the price goes up. When the price goes up, they say, "Oh, well, you've all been suckered." When the price goes down, they say, see, it's falling apart. Meanwhile, or they say it could all go to zero. It's like, well, it has never gone to zero. So why? For me, it was just a fascinating industry and technology. I am not and was never like a true believer in the sense that the early first kind of crypto OGs and degens were. I wasn't in it for like the libertarian angle or Bitcoin's going to replace the dollar and become the global reserve currency. I don't really believe that, but I just think that it's very, very interesting and wacky and zany, and it's never boring, And I'll give you one other answer as a journalist and as a writer. For me, the possibility that so excited me when I first learned about Bitcoin, and really this still hasn't shaken out, was the potential to fund online content with frictionless crypto micropayments. We saw like BAT, which was basic attention token, Brave browser. People have tried to do this, and it just kind of hasn't really caught on. I think part of it is like still too early. The browser crypto wallet is not yet ubiquitous, but everyone can understand this use case. Like a big magazine runs an investigative feature article. You want to read that one article. Well, you don't want to subscribe to The Atlantic for a year or the Financial Times. But if you could just click twice and instantly pay $1.50 to read one article, I bet you would. But they just make it so damn difficult, with all those steps. So that possibility excited me. And we still hear a lot about, blockchains or NFTs for content and for media. Still hasn't really played out.
Yeah, interesting. And as you're bringing this fascinating aspect, I've observed the news coverage kind of from a distance, really since 2016. So you've been in it much earlier. And it seemed to be that really leading up to quite recently, the narrative was essentially crypto's a scam. It's not a legitimate asset class. It's gambling at best. And like you said, a lot of people didn't understand it. And that seemed to be kind of the mainstream media, we'll call it, story that seemed to be run with pretty frequently. They would get, there'd be these very binary conversations. You'd get somebody on and they'd say, it's not a scam. And then you have somebody saying it is a scam. So it's a super binary. And I've noticed that recently, and maybe I'm off, but I'm fascinated to hear your experience and what you think. Recently, it seems to be that the news media isn't saying, this is a scam, or it has no legitimate properties or attributes, but there seems to be kind of a hole in that narrative of then what is it?
Yeah, I think you're right. And I also think crypto as an industry has really failed over many years to kind of tell its story. And for a while, and I think in tandem with the price run up and institutions coming in, the ETF approval, names like BlackRock and Fidelity taking it seriously, in tandem with all that, you've seen this degen narrative kind of get quieter. But for a few years there, the narrative among real crypto types was like, well, wait a minute, we don't need it to go mainstream. We don't need the mainstream to understand it. It can just be under the hood. You can use blockchains behind the scenes, and everyone's favorite, it became such a cliche, but it was like, everyone understands that email works. They don't actually know how the protocol works, SMTTP, they don't understand, or the internet, HTTPS. They don't understand these protocols. They just know, I write my email, I click send, and it works. Blockchain could be like that. And we don't need to teach people. And actually, I think you do. I think people need to understand it. I think you do actually need to care about what the larger narrative and mainstream reputation and image of the industry is. And boy, it was only 15 months ago, the FTX collapse. That was a terrible, terrible, damaging thing for the whole industry because it was bigger than, one scammy company. It was like, of all things, the company that had done the most marketing, had gotten all these athletes and celebrities involved. And by the way, that's why, for us to be at all-time highs this quickly after that huge of a scandal, I would say the biggest news event this industry has ever had in its history, and it was something that bad, that is amazing and tells you a lot. But long story short, the narrative now, I see big legacy publications now more ignoring it than trying to dismiss it, which I guess you could say is progress. But again, as we talk, we're at all-time highs, and I feel like I don't see coverage of it. If you go to CNBC, Yahoo Finance, you go to their homepages, they now list Bitcoin along with the other assets at the top. First they're going to do bonds and treasuries, gold, silver, the NASDAQ, the S&P. And then, you have to click next arrow and then Bitcoin. That's something. But boy, you would think there would be much, much more news discussion of this surge. And I think they're kind of just hoping it goes away. Or maybe you could say it's because of the excitement around stocks too right now. Everything's kind of up right now and we're watching the Fed and people are saying, damn, the economy suddenly looks pretty good. But compare this to the rally of 2020, 2021, the pandemic one. And then before that, 2017, there was much more of a frenzy of media coverage at that time. But maybe that's progress,
Well, yeah, and I mean, in my observation has been, I feel like a lot of the mainstream media covering or would be covering crypto, they don't really know what to say, right? So in
Mm.
2017 and earlier cycles, it was maybe this isn't a scam, or if it is a scam, it's turning out pretty good for the people that are in on the scam or at least participating. And now it seems to be, once again, that narrative is kind of dripped away and there's nothing to replace it. I also think that the reason people get so scared during crypto rallies as much as bear markets is it's hard to imagine, an asset class or an investment that goes up that fast. And for me, I think you hit the nail on the head. The crypto industry has done a really bad job of what is crypto. In fact, I was just out at ETH Denver and I actually pulled a friend aside who's kind of a figurehead in the industry. And crypto always has this tongue-in-cheek, sarcastic way about talking about itself. So, for instance, any coin besides Bitcoin, what do they call, right? They call shit coins. And I'm like, expecting an institution or enterprise to take your project seriously when you're referring to it as a shit coin is probably not a very good way to approach the space, right? And I think crypto's done a horrible job at this. And, the approach that we've taken, and we do this at the fund, is we frame the reference of liquid tokens are still startup companies. So if you're familiar with the venture capital asset class, you create shares essentially out of nothing and you build value and the shares go up tremendously for the ones that are super successful. And people are kind of comfortable with that have experienced venture capital and been the asset class. But of course, the difference is it's not in real time. It's not all the time, right? Like things get priced every 1 to 2 years. And for me, that's the narrative that probably should be getting pushed, but it just doesn't seem to be being pushed at all or talked about at all, which is fascinating. Like you said, I mean, you would think everyone would be talking about this. Maybe it's because NVIDIA's had similar type gains, like you mentioned, but I actually don't even see that much coverage of all these financial wins across the board.
Well, so there's a lot there. I mean, first of all, let's talk about kind of Bitcoin versus ETH, right? Because the way that I've often explained things to people when they ask me is like, okay, yes, Bitcoin is the OG. It's, the alpha and the omega. It was first out the door. It was the invention itself, right? But then I say, and that kind of Bitcoin is what it is, and it's kind of done. And I guess that's controversial with like the Bitcoin DeFi crowd, because now there's a number of projects that are trying to do smart contracts on Bitcoin and, NFTs on Bitcoin. Fine. But for the most part, like the case for Bitcoin has become the digital gold case, which on a side note is ironic to me because it was never supposed to be just an investment that you buy and hold on to. If you look back at the white paper, it was a peer-to-peer electronic cash system. It was supposed to be a whole new payment rails. And that's not how people are using it. They're just buying it and holding on to it, hodl, and hooray, the price goes up. But that's kind of all over there. Like Bitcoin is what it is. And to me, the Bitcoin story is kind of, it's hard to see it going anywhere else. But that's okay. Over here, the Ethereum world, I explained to normies, as we call them, like it's like the Bitcoin blockchain, except designed from the beginning to be able to build on top of, to be able to support smart contracts, applications, all these different things that now have come to light. People are interested in meme coins. You can call them shit coins, NFTs, all these different dApps, decentralized applications. Most of the lion's share are enabled from Ethereum. Now, I sound like some kind of like ETH maxi, which I'm not. I mean, to be clear, I think, you can't really talk and praise and get excited about Ethereum without, giving homage to Bitcoin, which came first. So it's both. But suffice to say, like, we're already a couple levels too deep, I think, and wonky for most regular folks, Joe Main Street, and for most media places. They don't really, so they'd rather focus on like, Bonk and Dog with Hat and Dogecoin are up big, or, when Musk was pumping Dogecoin on SNL, that was a huge story. But, I understand not wanting to take the time to understand, like, well, this one's built on this blockchain and this one's built on a layer 2. Layer 2s are on top of Ethereum. So it's a uniquely challenging industry to invest in, to care about, to cover as a journalist, and to be able to talk about in any kind of terse, pithy way on camera. It takes some explanation and some understanding. I mean, that's why I feel like to really write about it as a journalist, like you need to be crypto native. You have to understand the tech. And then that becomes controversial with certain people who are like, well, then you're biased if you're saying that you have any. Well, you got to have some if you're going to write about it cogently, right? So there's just a lot there. You're right with like the narratives, but lately the institutions are really shifting the vibe.
That's right. Yeah, 100%. So I've got to ask this question because I think it's fascinating. Talk us through what it's like in real time when a big hack occurs or an FTX type blow up happens in the crypto space. Like you get notified.
No.
What happens in the next 24 hours?
Well, that's sort of how the sausage is made too of covering the industry. I mean, the problem with covering news that happens in the crypto world as a journalist, with the integrity and nobility and aggressive neutrality that usually implies, is like you're basically looking through a window at this stuff. You're not actually like on the inside close to it enough. So you end up having to trust. And the great irony there is that the rallying cry of crypto is it's trustless. You don't have to place your trust in anyone because it's decentralized, it's peer-to-peer, it's a trustless network. But you have to trust usually what we call anons, so pseudonymous or anonymous crypto people, some of them white hats, on Twitter, who are actually doing like the blockchain sleuthing. Now, yes, I mean, with a certain level of understanding, you can at least realize that you can view, the Bitcoin blockchain. You can view these blockchains and see all the transactions, but they're not exactly labeled like this was a hacker or, this was Mike Klein just sent 3 ETH to his friend. Instead, it's wallet addresses and jumbles of numbers and letters. So usually there are figures who are more steeped in this stuff and spend all day studying these transactions and the ledgers than the actual journalists and media covering it. And you kind of have to go by what they do. So like, Zach XBT is like a great example on Twitter. I'm sure you've seen his handle. Like he's always just on it immediately. And, it becomes a little bit of an echo chamber of like, according to, and now you're citing someone, some of these people have come out and revealed themselves. But anyway, that's the first process. Is like the first step is the data gathering and like what exactly happened here. And then immediately it's, well, what do both sides say happened? And very often the story changes dramatically in the first few hours. Like, one side will say, let's say that it's a breach of a DeFi lending protocol. So without naming names, let's say it's called, Dan Chain. So you'll reach out to like the contact from Dan Chain and they'll say, we're on top of it, we're investigating, and we think it's okay, or we will make customers whole, we'll recoup their funds, blah, blah, blah. Meanwhile, if it's a truly decentralized platform, like ain't no customer service to guarantee that you'll be made whole. Now, very often, there have been rescuers like Jump Crypto came to the rescue when, Wormhole, which was a DeFi protocol, was hacked and helped make customers whole. But if you're relying on some investment fund or VC gang or other company to come in and save you when you're the victim of a breach or hack, well, doesn't that defeat the whole purpose of what crypto is supposed to be about? I mean, if you are at a level of risk where you are staking tokens into a DeFi protocol, then you should know what you're getting into, right? But yeah, we just try and do an autopsy, figure out what happened. But the truth is, God's honest truth, usually the smoke doesn't really clear until at least 24 hours later. And sometimes what ends up happening is, as with non-crypto things, sometimes the hacker is trying to prove a point, and then they send the money back and they say, see, I've exposed a vulnerability in your system. And the company or protocol or project has to say, well, thank you very much. And then they do a post and say, okay, this was helpful. And, and that's where you get bug bounties. But sometimes it's a hacker who discovers it and makes off with a bunch of money. Of course, a misconception that I think the public has is that all of crypto is untraceable, shadowy, and you can't get money back. That's not true at all. I mean, the authorities have many times been able to track things down because it's really not anonymous. It's semi-anonymous, and every transaction is attached to a wallet address. And sometimes it's surprisingly easy to be able to say, oh, this address sent money to this address, and this wallet address has a lot of money from North Korean hacker wallets. So companies like Chainalysis are very helpful in this context. And that's a whole cottage industry, right? Is these blockchain sleuths.
Yeah, I mean, people don't realize that the amount of diligence you can do on an event or a project is kind of unprecedented, right? So, I mean, I did 10 years as a VC, and you've got to ask for the data room. You have to hope that the documents are well in order and there's no errors in them or misrepresentations. And like you have to get privilege and request that information. And, like here in crypto, you can just kind of access it. Now, to your point, the fascinating thing I think about crypto is like when we're troubleshooting an issue, we have this same issue where we're not talking with anyone face to face. Like we're going on Discord and we're trying to message someone. And then it's, hey, can I talk to somebody higher up? And they don't know who you are. You don't know who they are. And they're like, oh, no, like I'm supposed to field it. Stuff that you can more easily navigate if you could pick up a phone or if you could call somebody directly or, if you were meeting them face to face. You're just not able to do that efficiently. And I think also building on your point, like people really don't realize, I mean, everyone's used to like you find your bank and that's where you put all your money, right? So you shop around for a bank. This is my bank. This is where I put all my money. And they're not used to like mitigating smart contract risk. Or for the bank analogy, it would be, let's assume that banks didn't have insurance associated with them. And if one got robbed, you would lose your funds, which I imagine at some point in American history, that's how banks were. You and me would need to go out and place our money at 10 different banks, right? Or 15 different banks to make sure if one got robbed that, we still had most of our assets intact. Obviously, we do that kind of work at the fund, but most people I find in crypto, it's like they feel like they're sprinting nonstop to catch up to the space and make decisions. And they're really striving for there to be this moment where my work's done, right? In the sense of like finding a bank or finding an accountant or finding a lawyer, how you would think of that process. But of course, that never happens in crypto because it never ceases to evolve. It never stops. It's 24/7. It just never turns off. And if you step away for even a few months, you come back and everything's new again.
Well, that reminds me of kind of the Coinbase case. And I love talking about this. I mean, there's a reason that Coinbase as a company, I think, has been extremely successful, and it publicly traded and for my money, probably the best known crypto company in the US, right? Among non-crypto natives. Like if you talk to someone who's not in crypto in any way, shape or form and ask them to name a crypto company, it's probably either they can't name any or they could name Coinbase. And It's not just good marketing. It's the fact that whether or not true crypto believers who want everything to be decentralized want to hear it, for most people, if they are going to become convinced to own some amount of crypto assets, having Coinbase do it for them is good enough. Like there are people out there who proselytize for, not your keys, not your crypto. You should do self-custody and have your own wallets and your own seed phrase. All that is well and good. But for many, many, many people, it's just a bridge too far. I mean, the tech is just still not smooth enough and simple enough that a dummy can do it. And so, a lot of people, it's good enough for them security-wise and trust-wise to just buy a little Bitcoin on Coinbase. And so, even Coinbase has so many people now and so many wallets. It's like they have notoriously bad customer service. In fact, probably you and I and anyone who is in the crypto space has friends who have said like, how do I have a Coinbase problem and I can't reach them. I never got a response. It's a good luck. I don't know. But, and it gets back to what you're saying. It's really not just a crypto problem, but even as certain technologies like dramatically move forward, we're still in an interim phase where, sorry, but there's a lot of like old school boomer type services that you need. Like if you have some kind of money related issue, you want a human being and you want a human being right now. And like, sorry, it can't be an AI chatbot. I'm not going to deal with like a stupid bot that asks me an automated question and then analyze. Like, I just want a human being on the phone so that I can say, here's what I'm experiencing. Tell me you're going to fix it right away. And man, crypto is just, usually it's not like that. It's like you said, Discord, Telegram, not to mention putting so much trust in these chat and messaging systems that themselves are rife with spam and bots. I mean, every few days someone says, is this you? And they send me a screenshot and they got a Telegram message. And it's someone with my photo and it says Dan Roberts. And it says like, hey, I hope you've been well. Like I need a little money. Can you just send me some ETH? And the messages now are written in such a way that I guess if you don't know me extremely well, you could think maybe it's me. Of course, it's not me. It's all fake. But like these things are just totally rampant. So long way of saying like, yeah, there's a long way to go with trust, and we're still sort of at a divide, I think, between where a lot of the industry is growing, and that is institutionalization and centralization and buttoned up suits getting in. And so that to me, and versus on the other side, the true degens, the true believers, the libertarian types who got involved in crypto in the first place because it was outside the banking system and it was anti-government. And I don't want to say never the twain shall meet, but there's a lot of tension between those groups right now.
That's right. Crypto is a dual-edged sword, and I think in the truest sense, right? So there was a time when banks didn't exist, and somebody came along and said, "We'll hold your money, we'll keep it quote unquote safe," and that's really what people wanted. And fascinating enough, Dan, if you look at some of the companies that have raised the largest amount of venture capital and funding in the crypto space, what are they? They're like the Celsiuses, because they nailed market product fit, which is people want the advantages of autonomy when it comes to their money, but they really don't want responsibility. And everyone is used to, like you said, they're used to this passive way of managing their money, or somebody looks after it for me and I can get a hold of somebody extremely quickly if there's any issue on my end. And people don't want to give that up. But of course, in some capacity, you have to give that up if you want to have autonomy and your own personal security that you're responsible for. And I'm not sure most people actually want to be in charge of their private keys. And if
Right.
they lose those,
Definitely not.
I mean, yeah, like most people don't want that. Like if you asked, I think, 100 people, do you want to sign up for this? You can do whatever you want with your money. You're in full control. But by the way, if you mess up, it's all gone. I think you'd have a hard time finding one or two people out of 100 that would say, "Oh, sign me up for that."
100%. And also, I used to talk about this at Yahoo a lot when we would talk about like this idea of the retail investor, because I would often find myself in a segment where we'd say, retail investors want this, retail investors want that. And it's like, well, if we're just talking about a regular person who doesn't work in finance as their profession, I actually think that what they really want is to not have to think about it at all. I mean, the average person doesn't want to, and probably shouldn't have to, also be like a money manager. I think most people, that's why it's good enough for them to just, if they own stock at all, they buy the S&P. They buy like VOO and SPY and set it and forget it and leave it alone. I mean, famously, it's like, as Warren Buffett would say, like most people are not stock pickers. And so you shouldn't be trying to pick winners and losers. And I think that applies to crypto. And you're right. Like the things that have gained, I think, mainstream attention, it's because they've bridged the gap, at least in their marketing. How true is it? Many things were exposed. But they managed to convey themselves as a tool that could help regular people that, here's the key, won't require you to have some kind of deep tech understanding. Another thing we hear a lot about in crypto, especially in the last couple of years, is like various dApps. So apps that, run on ETH or run on some other chain, they are decentralized applications, whether it's Web3 social, crypto powered social media, games, betting, prediction markets, all these different things. And how many founders have I heard say the wallet is the portal? It all happens through the wallet. And soon, everyone will have a wallet. I don't know how soon that'll be, man. I think that's going to take years and years. I mean, even if they really make the UX better, and MetaMask has, a long way to go still with its UX, but Rainbow, whatever you want, name whatever, browser crypto wallet you like. I just don't think like my mom, and I'm not trying to disparage her because she has figured out Facebook and Instagram and email and Substack, subscribing to email newsletters. There's a lot of tech things she does, but I don't think she's ever going to have a crypto wallet. And so all these businesses that are relying on a certain level of tech savvy, there's got to be, it's got to be one click. It's got to be, you can sign up with your email address. You sort of have to demystify that part of it.
Yeah, we live in this really fascinating time where the depth of knowledge required to do anything well has been increasing and increasing. But tech has built these on-ramps to get people into that very thing that requires a tremendous amount of expertise easier and easier, right? So it's never been easier to purchase stocks, to use leverage in stocks, right? There's tons of threads and Reddit posts for people that have gone on Robinhood and just levered up, right? And just decimated their net worth. It's never been easier to get into real estate. There's now sites where you can, at the couple clicks of a button, invest in a real estate property you've never seen. And by the way, you know nothing of real estate. And it's never been easier to sign up for Coinbase or for a centralized crypto exchange and start buying all these tokens and coins that you have no idea what they really do and no idea if there's any, there's strong leadership behind the project or even how to analyze that. So it's fascinating because it's like the very things that people should be like really aware of, which is, look, you can only be an expert at a few things. And the deeper the knowledge required to do something well, you should probably find someone that already is the expert to do it for you. But by the way, here with the click of a button from your home in your pajamas, you can go ahead and do it yourself.
It's scary. I mean, when the FTX meltdown happened, there was a lot of anger at crypto itself. And that was frustrating as someone who, thinks that this is actually a legitimate thing that is going to continue to exist, which is what I always say, by the way. And I think saying that shouldn't, brand you as some kind of crypto crazy. I mean, all I'm saying is I believe this is a real thing and it's going to continue to exist. That's all. But, even that was impugned when such a high profile thing lost so much money. I mean, a lot of people lost their shirts. Now, of course, quietly behind the scenes, a lot of the money has been recouped, more than people realize, I think. But, a lot of people have been made whole. But at the time, there was a lot of outrage and anger. Same with Celsius. I saw all these stories. And that was low-hanging fruit for news organizations. That's an easy story to write, is like, find a guy who says that he put his whole net worth into Celsius, and now he's destitute and pissed, and what does he do? Who will help him? And basically, even if they don't say it, the implication is, isn't crypto horrible? And it's like, well, at the end of the day, you make your own decisions, and you shouldn't put all your money into any one thing, much less something that you don't understand. But, as I said earlier, things like Celsius, BlockFi, Gemini, FTX, they marketed themselves by marketing to normies. And I think that they did that pretty well. It was just like, this is the financial future. And now I think maybe what will come out of it is people have a clearer eyed view, and they decide like what most people are going to decide is, this is an asset that deserves maybe 1% to 2% in my portfolio. So if they're just buying on E-Trade or Robinhood and they do it themselves, maybe they put a little into the Bitcoin ETF. That's why it is seen as a price pump, the approval of the ETF. Of course, again, it's the ultimate irony, because the crypto devotees would say, well, this was never supposed to be the point, was that you could buy it as if it's a stock, but okay. Or if there are people of a certain net worth that they have a guy or gal investing for them, they say, hey, I'd like to be in crypto. Okay. So those institutions will get into crypto for them. But the veil has been removed, I think, and I hope for a lot of people, that you probably shouldn't be messing with most of the DeFi system if you're just a regular person.
Yeah, but most people, I think, have a hard time helping themselves. And to your point, like, look, is crypto dead? Is it here to stay? To me, it's, do you think that the internet is going to continue to evolve? Yes or no? And do you think technology is going to continue to evolve? Yes or no? Well, this is simply the next evolution of both of those things and how they intersect. And that's what I think, a lot of people don't really understand, which is at its fundamental core, this is just technology doing what technology does, right? It's progressing. It always progresses a little bit faster and things break a little bit and then it corrects itself. Like I said, I mean, you have this experience too. Being in venture is actually, the fact that prices aren't updated but every few years, and investors invest in a fund and they kind of sit back and get reports, and you don't experience that day-to-day volatility, but it's there, right? If you've been on the inside, you understand that these companies, if they were priced in real time, their prices would fluctuate just as wildly, especially early stage ones. And you understand that behind the scenes, a lot of things are breaking. They're trying a lot of things, they're breaking, they're having to rebuild, et cetera, et cetera.
Yeah, that's a really good point too. Like, traditionally things move pretty slow, and crypto moves at breakneck pace. Running a crypto-specific news site was often brutal in terms of the hours. There was no market close. News just happens like on a Sunday at 7 p.m. Always the biggest stories broke on the weekends. So that was part of it. And I think something you and I haven't talked about yet is the FOMO that most people have. They just, you're trying to sell people on a vision of the future of the internet, but you have to be patient, and it's going to come, and it'll take years. And that's a hard sell, because when you're in it, you want to see your number go up. It's like I sign into I think it's either B of A or Merrill Lynch, but one of those. Every time I sign in, I noticed recently it tells you like your net worth right there on the sign-in page. It's like just a big honking bold number. You're like, whoa. And then it has parentheses, and it tells you how much it's gone up or down today. And, it's just one day and the market goes up and down. But sometimes you log in and it says like your stuff is down 4% today. And you go, oh my God. And so people want to see the gains. And that's why, during every crypto bull run, we all have friends who've texted us and said like, hey, what should I buy? And my go-to that I always tell people, first of all, this is not financial advice, TINFA. I say I'm not a financial advisor, and I'm not giving you investment advice. That said, what I like to say, or have said in the past, is I say, there's thousands of cryptocurrencies out there. Other than Bitcoin and ETH, I wouldn't guarantee anything. In other words, I fully believe that both Bitcoin and Ethereum will still exist in 20 years. I'm sure many other cryptocurrencies will also still exist, but I'm not going to name any or pick any because I don't know. So that's what I used to say. But inevitably, so in other words, I'd say if you want to buy something, you can't go wrong with BTC and ETH. And inevitably they say, well, I want to buy Dogecoin. It's like, so they want to buy the thing that seems to be spiking right now. But of course, by the time you, a regular person, have heard about it, you're probably too late.
Well, and it's such a hard question to answer, right? So I get this question all the time too. And it's part of what led me to launch the Liquid Fund is I realized that people are thinking of the answer that you give completely different than you're even executing the recommendation. So if I say, I really like this coin, it could mean in the context of 1% of your crypto portfolio, right? With cost averaging in and different parameters being met. And of course, the option to sell if we see different things not happening that we want to see happen. That's the beauty of a liquid market. They're thinking, I'm going to sell all my Bitcoin and ETH and put it in this one coin that Mike mentioned on the phone, which is not even an applicable strategy in the sense of what we're doing behind the scenes or what I'm doing with my own personal portfolio. It's completely different. And so it's such a dangerous question to ask. It's like, would you say, what stock do you like? And somebody says a stock, would you sell all your stock and put it into that one stock? Maybe, but for some reason, I think in crypto, people tend to act more black and white, more binary, right? Sell it all, buy everything, put it all in one thing. Because once again, I think at the end of the day, they're looking for that relief valve from the 24/7 market that you and me have to deal with all the time, which is, I don't want to keep following this. I want to make some decisions and then not have to be involved in making more decisions. I want to be done with it, right? I just want to sit back and let my investment grow. And of course, that's not really what crypto is good for. Now, the caveat to that is I think that's worked out really well if you've held Bitcoin throughout the years and Ethereum, but the more down the rabbit hole you get, the more active management you need.
That's 100% right. That's there's something there. It's like the inverse of not Occam's razor, but one of those rules, it's like work fills the space provided. So that's it. We should coin that. You're right. That I agree with you. The more obscure the shitcoin, the more work is going to be required for you to follow it and be invested in it. Now there's something there when you say, what if, let's imagine it in a stock context, with equities. What if you said to someone, what's a stock you like? If I were to be asked that, I would probably answer with companies I like. And there is a traditional thinking that is just, buy shares of companies that you believe in, big blue chip companies that you think will still be around in 50 years. And, you probably can't go wrong. Like a lot of people, I think, sold Apple stock early on. A lot of people sold Amazon. It's like, dude, leave it alone. Don't touch it. And so in that regard, even though crypto is in so many ways, and these are the qualities people lead with, it's not like stocks. In that one way, it should kind of be thought of like stocks in the sense that if you want to buy a token, well, figure out who's behind it, what's the network or project associated with the token. Do you believe in that network or project? If you think that helium is really interesting, a decentralized wireless service that sort of quietly is working and is existing, then, you could buy some HEL tokens. Like, if you believe in Solana, okay, good reason to own some Sol. But if people are saying, look, dog whiff hat is going up, well, it's just a joke. I mean, so if you want to get in because it'll be fun to be in on the joke, okay. But with most of these things, I think, too many people, they just want to know, well, what they don't ask it this way, but it's like, well, what token can I buy and it'll keep going up? No guarantees. And why don't you do a little bit of homework? But it's kind of hard for people to put in the time in that regard. And that's why, again, like most normies, I say, just go to Coinbase and buy a little Bitcoin and a little ETH, and then don't think about it for the next 3 years.
Yeah, certainly. I mean, the depth which crypto goes, it's very hard to explain. And to your point, like buying stocks that you like, that's always been a philosophy of mine. And having kind of a macro thesis of where you think the world's going to be, and what stocks are building towards that. What's really interesting in crypto is I use this analogy of crypto island. So you have this place called Crypto Island in my analogy where everybody, the best and brightest minds meet and they do all sorts of advanced business. And then you have the mainland where they're very they get little trickles of what's going on Crypto Island, but they're very high level. Well, the issue is a lot of what's being built in crypto is to solve crypto problems, right? So gas fees are high. Let's solve that. I can't bridge from one chain to another easily. Let's solve that, right? I want to wrap my Bitcoin and use it on Ethereum. Let's solve that. So you, by default, have to be extremely involved in those deep ecosystems for you to even understand the value that a lot of these projects are bringing. Where I think with stocks, and obviously there's sectors of stocks, this is true, but with your retail driven stocks, like you mentioned, like Apple, they're part of your everyday life. Crypto is part of no one's everyday life unless they're intentionally going to Crypto Island. It's not something you're going to run into. You're not going to walk into a building and it's oh, this is the headquarters of, this crypto company. Everything's virtual and you have to kind of immerse yourself in that world.
That's very well put. And I think that's also the difficulty of being a crypto specific or a Web3 investor. For the VC side, I mean, you're constantly getting pitches from projects and it's well, here's the problem and here's how we solve it. And usually it's there's at least 2 other projects that are doing the same thing. And each one of those projects will tell you, yeah, but we're doing it better. Or, well, they don't use this and we use this mechanism. And man, I mean, obviously this is how venture works and you're placing your bets and throwing money at the wall and you hope something hits, but it's very difficult to compare projects across certain subsectors in crypto. I mean, what you were just describing with Crypto Island, a lot of that is really infrastructure, right? And there's so many probably eventually very valuable, very important crypto projects that are right now in their early stages. And what they're building is totally unsexy and opaque to most people. They say, well, behind the scenes, we're allowing you to bridge from this chain to this chain, and we remove the gas fees by it's all right, just most people, it's don't even explain that to me. I just want to know it works. And so they're doing the building right now. It's picks and shovels, and it's going to take years for it to play out. And in some cases, the thing that hits, it's not actually necessarily, and we know this applies to all of tech, but it's not necessarily because has the best technology or the strongest project. Sometimes it's due to a mix of attention, branding, marketing, press, the investors that put their money in. You get a Mark Cuban who's out there proselytizing for you, whatever it is. So it is a very hard game. You're right. And I think it's most of it is just way too thorny for the average person.
Well, and being trained in VC in Web 2, it's kind of fascinating. Have you ever been to a third world country or a second world country and something that would be very cheap and high quality in America is very expensive and even lower quality over there? Have you ever had that experience?
Yes.
So it's when you look at a Web 2 company, right? It's founders have pre-sold $1 million in product. They've followed the lean startup process. They've interviewed 50 executives. they are building exactly to a pain point and to solve a problem that those executives and organizations have solved. Maybe even a few of those organizations are investing in them in their early seed round and willing to work with the VCs. That's kind of like what's presented when you do a seed stage, raise your first few $1,000,000 in Web 2. In Web 3, you'll encounter companies that haven't done any of that, and they've already got $40 million committed in a round, and they're like, we have a couple $1,000,000 left. And so the thing about crypto, I think, is that it sometimes thinks the learnings and the rules and all the wisdom handed down from entrepreneurs in the past doesn't apply. Right. And I've seen a lot of these Web3 startups get in a lot of trouble where they've raised a tremendous amount of capital. It's sitting in the bank, and they don't even know what market they're going after, right? Like they're going and pitching enterprise executives, and they're saying, here's our technology. What do you think you can do with it? And the executive's like, hey, man, that's not my job. I've got 5 things that I'm really focused on accomplishing this year and the next few years as an organization, my success metrics. You're either going to help me solve one of those, or I don't know what to do with you. And I think that's why enterprise adoption hasn't occurred quickly in the crypto space. And I also think why doing diligence can be a bit frustrating as a VC. I mean, even look at FTX, right? You had Sequoia on the phone with them while he's playing a video game. And from my understanding, they had no board or no real board with VC representation where, as a Web 2 VC, if you write a $3 million check, you've got a board seat for an early stage company. You know what's going on.
And they're using TurboTax. Using TurboTax for their books. I mean, there was no adult in the room. You're right. And the Sequoia blog post about Sam is crazy. I'm sure you've read that they tried to scrub.
Yeah. It's just why did no one insist there were adults in the room when historically you've always insisted there were adults in the room when you've wrote much smaller checks?
I think when you bring up I'll put it this way. I think the problem that I've seen with a lot of early stage crypto projects that are looking to raise money is they don't actually have product market fit yet. They have what they say they're going to do, and then they have a number of crypto native degens who are either involved or support them or say, yeah, it looks great, and they've got a PowerPoint. And very often they raise money purely based on the strength of what they last did. So, I'm the founder of this other crypto project you've heard of. Okay, that was a success. But actually, who's going to use this thing? Are you really convinced of, the product market fit? Is there a need for this? And there's just no strategy beyond first let's raise money. And that's not even to talk about what they're going to do with the amount they raise. You're right. So many of them, they over raise. And this is not just crypto, we should say. I mean, this is also a lot of tech startups. I mean, in that kind of unicorn boom, those heady days pre-pandemic, I mean, there were companies just raising so much money and getting enormous valuations. And it was they hadn't done anything yet, and so that it very much got out of hand. But I think especially in crypto, too many projects are trying to pump the gas and they don't actually have a user base yet. They haven't found product market fit.
Well, yeah. And to build on that, look, it's your job as an entrepreneur is to find market product fit, period. The funding will come generally if you show evidence of that. And when you remove that barrier, what happens with almost every founder across the board, this isn't just a Web3 issue, and this has been written about, when founders overraise and they get capital really too easily without having success metrics to show for it, they feel like they've already reached the finish line. So, what's less concerning to me is crypto projects that have found market product fit. It's, are you doing anything to find market product fit, right? Is there a culture of that ingrained in the company? And often there isn't, right? The idea is raise as much money as possible, become as popular as possible, and then just try to increase token price however means we can until the tokens unlock. And it's okay, great strategic plan, but no idea how market product fit or the search of market product fit even fits within it. And by the way, to me, that is the journey of the entrepreneur. Everything else falls in place if you focus on that. Things that can fall in place superficially tend to fall apart later if you don't have market product fit. Like you just mentioned, we go through these ebbs and flows where companies get capital too easily. They don't really have to prove it. and then subsequently what happens? They're all gone eventually, right? And I think the idea of not focusing on that is a huge miss. And it's been fascinating. I mean, I've looked at some projects recently, even though we run a liquid fund. I've looked at some projects that are like 3 to 6 months out from launching, and the silence I get if I even ask for a pro forma, or if I ask for like customer testimonials or notes on, executive meetings. I mean, I know there's nothing there, but they're almost insulted that I'm asking for these very basic things, which I would call as part of the package of a traditional venture investment.
They're like, what are you, a boomer? Why do you want those things?
We don't have time to build a model. Well, how do you know if you're even going to be profitable? How do you know where you're going to spend the capital? Like, do you want in the round or not? Right.
You have 2 days to answer us to get in. Right. Now, to be fair, I think a difficulty for crypto projects, if their service or product is user facing, that is, they need to amass users. There's the tension between, what I call money crypto and tech crypto. So money crypto is like, the users are going to use something only if they think they can make money from it. And that's how we've landed at projects having a token when really they probably have no business having a token. Or now, to get hyper recent, points. You say, use our service or use our app and you'll get points. And that's the new kind of attempt to get around the issues, the regulatory issues and concerns that come with token. A lot of people in the US, it's like, well, if you do a token, the current SEC is going to come for you. That has to change long term. I mean, that's a major, major hurdle to innovation in the US. But now projects are saying, well, you'll earn points. So that's why we've seen, without naming names, in the last 6 months or so, a number of hot crypto social apps become the app of the moment. All the early adopters are using it. Follow me on, X, and you'll earn points for interacting. And then it fizzles because either they didn't quickly enough make explicit that the points will become money and you'll make money from this, or they tried to back away from that. I mean, man, things just really have popped and then flamed out quickly, because I think that these crypto projects, it's very, very, very hard for them to figure out how to A, amass users, and then B, retain them and get them to keep using the thing, unless they think they can number go up, make money.
That's right. Retention is the hardest. It's fascinating you bring up the airdrops, because I was just talking to somebody that, they're doing the point system. And I was saying, man, these airdrops and point system, first of all, ironically, again, you're saying, trust us, like do this thing, lock up your capital. Yeah. We'll take care of you, wink. But it's also another huge dual-edged sword where you see tons of projects just plummet in value and everyone churns on them if their own independent expectations aren't met on what they were going to earn from these points or from this airdrop. I think Wormhole's going through this right now, where everybody in real time is just bashing them for their airdrop, and they're trying to manage it, and these narratives kind of like take a life of their own. But as you're seeing more and more of these point systems, like you said, in project competing, even having success there, and then the VC capital flows in because now you've got $1 billion in TVL. But by the way, as soon as that airdrop occurs, it's gone, right? I mean, like those are people that are just in it to farm airdrops, and they're just locking up their assets to do that.
Yeah. But the problem is, like, if you follow that to its logical conclusion, okay, we want users who actually want to use this thing and they're not just here for the token. Well, like then you get into, none of this stuff except for a few things has been around long enough for there to be trust. So you do sort of feel like you have to give them some incentive to try this new thing and put their money into it. Especially the biggest hurdle, anything that requires you to put money into. There's so many of these now where it's staking and it's lending and they're promising high yield. And of course, that was the problem with those centralized companies that were offering, there's a reason that you're not supposed to be able to make, 20% yield from a savings account. Even the high yield savings accounts out there. So some of these DeFi protocols like actually are giving you a huge amount of yield, but man, at any given moment, you worry that the merry-go-round will stop, right? The musical chairs will stop. So it's just hard. Really, it almost sounds like a no-brainer. It's like make your product sticky without needing to dangle the carrot of a token that will go up, but easier said than done in the crypto industry because the casino element is really hard to shake out because it's how often is a technology also money? That's what's difficult about it. You're trying to get people excited about the underlying tech, but at the end of the day, the thing that garners attention and care and interest and headlines is the price.
Yeah, and we've got to wrap it up soon, which I feel like we could talk for hours. I'll close with an addition to that thought, which is, finding market product fit is all about what are you testing for? And, an example that it has existed in entrepreneurialism for a long time has been this example of, like if I give you a pop or a drink or a new product for free, I'm not actually validating that you'll pay for it. I'm validating that you'll take it for free, right? Or even to pull the string even more, if I'm paying you to drink our new, I don't know, vanilla cherry flavored Mountain Dew or whatever it is, I haven't actually, all I've proven is that you will take money and try our product, right? And that's really what I think the challenge here is. A lot of these point system and airdrop projects that get all this traction and all this media, all they're validating is that if we reward people in a way that's not sustainable, then they'll come. But you're not validating that, as you mentioned, the product is so good and adds so much value that you don't have to reward people. And obviously it's hard because these teams need to do things to attract users. But that's why I think retention is so hard, because you're not even testing for retention when you do these activities.
Yeah, I think that's very well put. Or to put it in the context of big tech, the famous mantra is like, if it's free to use, you are the product. Yeah. The company is benefiting from having you use it, and they're either harvesting your data or they're going to someone in the crypto context, they're going to someone and saying, look how many users we have. Well, yeah, because they're all using it because they think they're going to get a token eventually for their use. So well, it's
thanks, Dan, for your time, man. I really enjoyed it. We'll have to have you on again soon. And I feel like we could make this a 3-hour podcast.
Great fun, Mike. Yeah, there's so much there, and we'll keep monitoring all the ups and downs.
Talk soon.